Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for November 8th, 2007. Well, once again I come to you today, and the volatility in this market never ceases to amaze, and it just seems to get more and more, frankly. We knew yesterday that we had a chance for a big down day today. There were two factors involved here, and I'm going to show you go right into the charts here. Alright, number one on the daily Nasdaq chart was a break of this candle right here, the 20 moving average. The candle closed below the 20 moving average really for the first time, even going back to around here. Okay, and once we did that today, and you saw this double top pattern formation, and I'm going to get out my trend tools to really get into this. Okay, here we go. Here's your double top. And yes, we did have a spike above, but note there was no confirmation the day after, meaning the candle, this next candle, didn't break the high. You needed to confirm a move up on the daily with a break of that high the following day, and we did not break that. Now, later on, we could break that maybe in a month or so or a few weeks, but as of now, we did not confirm it, so it remains a double top as we gap down below that line one more time here. All right, then we traded sideways here, and then finally we got crushed. And this crushing basically closed us below this 20 moving average. Okay, and as that closed below that 20 moving average, we said yesterday, well, this could be ugly. In addition, we knew CSCO had came out with negative earnings, and that was probably something that was going to be very negative for the markets. Now, last night, the futures, the S&P futures, were trading down about 15, and the Nasdaq futures were down about 31 points, and we knew it would probably be a down day today based on CSCO. But what's even more interesting here is that going into the open of the market today, the Nasdaq was flat. In fact, the Dow was up. And it was very peculiar to see that. And then all of a sudden, the selling started to come in. And I want to show you here. Basically, here's the close of the Nasdaq, right? This is the close from yesterday. Here's where we opened. We opened flat. We pushed up a little bit. You see that little wick there. And then we started to fall. And we fell here. And then consolidated. Then really went into a tailspin. Okay? Basically, the low was reached around 1 o'clock this afternoon. Then we saw a nice little bounce, and you all should be seeing the pattern I'm drawing here. Okay, nice little W pattern there. That's a bullish pattern. You have a double bottom formation right there. All in all, there's great patterns in this market on this Nasdaq chart, as well as the S&P chart, the E-minis chart, and so forth. So you got a fall here, consolidation, which is always happening. Note the 20 moving average is never moved above here. Okay, so again, you have a little consolidation period. You have a sharp sell. Then you have a rally, but it doesn't get above that 20 moving average, and it eventually dies out. You got to have another sell-off down to the lows again, and then you have a rally. Now, the key here on the rally was this candle right here, closed above the 20 moving average. All right. Then we retested. You always usually retest a moving average, and then off to the races up. All right. So you got, and I'm going to show you guys. Notice right here. Okay, this candle closed right above. Then you had a retest where this wick touches right below. And then up you go right here and rally to the 50 moving average. Note the 50 here, how you touch the 50 perfectly, and then you have a little sell-off right into the close. All right, all in all, the Nasdaq ended down 52 points on the day, a dramatic sell-off. The Dow was really just barely down at all. The Dow was down 33 points. The S&P was barely down at all. It was down 0.85 points, down a fraction of a point. Okay, we saw oil pull back a little bit. Overall, the dollar index strengthened slightly today, and Bernanke was testifying before government officials today on various things, and there were a lot of interesting questions asked. Some of the best questions probably by Ron Paul, who really seems to understand in some ways, not in everything, don't get me wrong, but in some ways he understands what's going on here with the dollar decreasing in value and how it has a negative effect, and whether or not they're printing money, we don't know. M3 money was stopped being reported, which is a negative in my opinion, because then they can print money without having to report it. But long story short, it is a worry and concern of ours, and it does need to be brought out to the forefront and to understand fully what's going on. Now let's go to the ES chart here, and the ES futures, we'll look at them here. And you can see the same intraday chart here. Overall, here's where the market opens at 9:30. This is all pre-trading, and you can see the trend up here. All right, you had a nice trend up going here. And what I actually want to show here is you can actually draw a trend line right here. Okay, and notice how this coincides with the 20 moving average. You come down, you break below here, then you close your candle right here, and then off to the races on the downside. So you have a down push, consolidation, huge drop, W formation, which tells you you're probably going to move up, W formation right there, and then the A formation, the beginning of the V formation here. If the market was open longer, you'd expect a rally back up here, possibly to new highs, to complete the V formation. Now, because the futures trade after hours here, they start at 4:30 and go 23 and 3/4 hours a day, you're going to have sideways trading, obviously. You're not going to have a spike up to finish that V, but we will monitor the situation tomorrow and find out what's going on. Now, the rally late in the day was almost choreographed. And what do I mean by that? Well, we've talked about in the past videos how these late day rallies just come out of nowhere, and it's almost expected. Yesterday was the first day we really didn't see a late day rally, and we closed at the lows of the day. Well, today we saw one. The Nasdaq was down upwards of 90 points here, 100 here, and 90 points right here. And then all of a sudden again, come 2:30 to 3 o'clock to 3:30, just a monstrous rally. All right, yeah, it's almost 3 o'clock here, as you see 1500 hours right here. And the 3 o'clock rally it's almost like someone just takes a bunch of money and just throws it at all the index stocks that pertain to the indexes and pushes them all up. The market rally's huge, and everyone is like, oh, maybe we should be bulls again. Oh, look at this. And, okay, that's all good, but you also have to be careful here, because I don't think this is over. And all the other times now recently we've had these sharp sell-offs, and this almost mirrors this, right? You have this push down, bounce up, push down. Here you have the push down, bounce up, push down. And that's all good, but the question has to be asked, well, at some point people are going to expect that, and then that's when it's not going to happen. So I offer this. I always suggest being the contrarian out there and being extremely cautious, and to take things very slowly and carefully. Okay? Now, obviously, what's great about today, well, we had the QID, and I mentioned this in yesterday's video, and the QID, in the chat room, we had picked this up here, and just a monstrous, area right in here near the bottom. We saw the bottom formation. We noted how it was hitting the 20 moving average multiple times, and it couldn't break above. The idea here is that eventually, if it hits it enough, it's going to break above. It just has to. Okay, it's the whole premise of hitting a door. If you run into a door enough times, eventually, at some point, you're going to break through. The door is going to break down. You're going to go flying through the other side. The same premise applies to stocks. Okay, it taps on that wall or that glass enough. Eventually, the glass is going to break, and off to the races it goes. Now, for those in the chat room, we talked about a target price on this. And the target in the chat room originally was the 50 moving average. I think back here when we were over here, people kind of looked at me and rolled their eyes. But sure enough, it did see that. And funny enough, even though it was upwards of 39.50 here, if we all noticed where this closed, right underneath the 50 moving average. It's a very, very interesting close there. Couldn't have choreographed it any better considering the charts. How charts pertain to moving averages, that's obviously where you're going to close. Now, you might see a bounce tomorrow. It's a little up in the air. There's a lot of negativity out there, but at the same time, we saw some major stocks get hammered today. Google, look at this. Hit its 20 moving average. Google, taking a hit. It was down as much as 55 points today, plus. Okay, and it rallied back, closing down 39. BIDU, again, hitting the 50, perfectly passing through it, but then rallying back above. As long as they don't break the moving averages, that support still remains, and you have to respect that support. Apple. Okay, now Apple's a different case here. Apple actually crushed through its 20 moving average and closed below, but we'll monitor this because chances are it's going to go with the market. Wherever the market's going to go, Apple probably will go. I think ultimately Apple needs to come down and test the 50, but we'll see if it can rally back above its 20 moving average. Research in motion, same thing here. It pierced the 20 moving average and bounced back above. Now, as long as these things hold their support there, that's going to be the key. Now, let's look at the SPY here on the daily. The daily SPY is a little interesting here because you have the averages now trading below all key moving averages on the daily. You have the 20, the 50, and the 200. We closed below the 200. All right. However, I do see some general support in this area right here. Okay. Notice this point. This comes down to this general lows to this in this area. Okay, in this general area. Now, I don't have an exact price on that there, but it's just a general line. I'm just eyeballing here for you guys. Should this break below this line and especially take out that low, then you're definitely talking about a move back down to this low. Okay? Now, let's quickly look at the Qs. Now, the Qs are key, and this is why I think the Qs might bounce tomorrow, or you might have a Nasdaq bounce, is because, you had the same thing with the 50 moving average. Yesterday, we closed below the 20. That was our signal that chances are we were going to see more downside. We saw that downside dramatically today, and then we hit and we pierced the 50 moving average, but again, look where we closed. We closed right there on it or above. And as long as you don't close below on a technical basis, you have to say, okay, it held. All right, they rallied it back, they kept it above the support line, and it held. So, again, folks, anything can happen because this is the wackiest market I've seen in a long, long time, dating back to probably 2000, in that range when the internet stocks were coming down or going up. But all in all, the technical side of things are pointing to a possible small bounce tomorrow, and we'll see. But there was a lot of damage done today, and here's the Q's intraday, and you can just see the W pattern again. A lot of major damage done today, okay, in the technicals. Now, one thing I want to point out here in the last few minutes, the morning was great because we had QID. We sold it up, made a great profit on that. We bought it at 30. The main position was bought at 34.48. We sold it in the 37s for a $3 profit, about just phenomenal. In the afternoon, when the market rallied, the day trading was great. So come join the chat room. Come join the Swing Trade Alerts. We'll talk to you tomorrow. Take care.